Well, hello members, and welcome to this week's show. It's May 22nd. This is the weekly review. We take a look at what happened and where we're probably going for the next week. The last week was kind of what we thought, thrashing back and forth, a little bit up, a little bit down. They closed it up on the week. NASDAQ was the leader, and that was a big push on Friday with the stocks in particular. AMAT earnings got a nice push up. There was also Apple at the beginning of the week with the Warren Buffett news, but that was the big driver this week. 1% there. The Russell got a nice little pop as well. Outside of that, it's pretty much flat. So if we look at the coming week and ask ourselves, what can we expect, looking at the indexes themselves, the main thing that happened last week was we had the S&P probe those lows as we thought would take place. They did hold, which was also our thought coming into the week. And so you come down, you test into these areas, right? You didn't quite get to the last one. You test into them, you get a hammer reversal, lighter volume, right? Flips around, gets a push back up. At this point, you do have a series, if you look at it, right? You got a series of lower highs forming each time on the way down as this correction, if you want to call it, just pullback probably is a better name, has taken place. You still have, if you go back to the classical stuff, you still kind of have this head and shoulders that everybody's looking at and trying to decide whether it's going to break. You had some folks probably thinking it had already broken, right, if you draw the neckline based on those. But it just gets up underneath it, right, pops back over it. And neoclassically, we could tell that it wasn't breaking because the volume wasn't quite there. It was about the same volume as our two swing point lows that we were testing into, and we hammered reverse, so we knew we would probably get a pop on Friday. Now the test is going to be back to the top side. If you draw this in and look at it from a perspective of ranges, right? So if we take a range here, we take this bottom area now that has formed, and it's really just this area here at this point. You've kind of got this range that's taking place down here, the top range up above it, and so we're probably going to come back up into this area, or at least try to, and see if we can get higher. If we fell there, we potentially could set up another swing point high at this level, right? And so you'd have all these swing point highs just kind of accumulating on the top as it continues to drift. And if it does fail, then of course it's probably going to come down and try to break these again. Now, the next test of those lows is a higher probability you break them, and so that will be the test on the way back. Also realize we were coming into this quad witching bar, I believe it was, back here. Volume was pretty big there, and so you almost would have to expect, which was one of the things we were leaning on last week, that this area would probably hold, and it did. And so that's the S&P 500. If we move over to the NASDAQ and take a look at it, you've got the same sort of pullback taking place there. This 48, if we're looking at the push up, this range, we have to ask ourselves, where can it move to? This 48.50 area, the top of this bar, up into the swing point high area, that's probably where it's going to try to get to, so you could expect some sort of a push up into that zone. If we look at other indexes, like the NDX here, you got the same sort of picture, just a couple different bars. You got this big wide price spread swing point high here. You have this swing point high. I would think as it pushes up, that's probably going to be the area it tries to get to. Notice that this is almost an overlap of this and this, so they're all in the same range. I wouldn't be surprised to see it try to get that high. It'd be a pretty good run. I mean, you're coming off of 42.75, run all the way back up to 44.50, almost 200 points. Moving to the Russell, we can see the same sort of bars here. In other words, this big wide price spread bar. Now remember, the Russell had actually failed on this swing point high here, the retest regen. It actually failed, got up underneath it. So, the markets have told us already that they are in some sort of a sideways consolidation instead of a continuation of that upside move. The only one that really is, well, I wouldn't say the only one, but the strongest one has been the S&P, because it's got a broader mix of energy, basic materials. You go to technology, the financials, so forth, right? Financials got a boost last week that allowed it to stay higher, but in general the picture is about the same on all of these. in that we have this condition on the way back up here where we're coming into these big bars. So you've got the wide price spread bar here, the swing point high there. So you have to think your resistance is going to be in that zone as this pushes back up. So all the indexes still telling the same story that they told us on Thursday, and that is that they want to try to push back up a little bit higher, and then they're going to come into their next test area, and that's where we're going to get more information. Moving back over to the S&P and looking at the longer term picture, again, just like we were seeing on the daily charts, you actually had support on this weekly chart as you came back into the top of the breakdown bar. So once you go over the bar and you come back into it, right, it's going to provide support. It's a low risk entry, and that's what was happening on Thursday last week as it pushed into it, right? Volume over here, fairly large compared to volume coming back. And so when you don't see the volume escalation, that's telling you that the sellers are unwilling to sell at the lower and lower price points. In other words, the supply and demand situation is flipping back around, at least on the short term, which means you're going to try to bounce back out of there, and that's what we're doing. As we bounce back out of here, we looked on the daily to see where the price points were that we could expect this to bounce to. If we look on the weekly, right, you can see these two breakdown bars here is going to be the key area, and that's where it was before. So if we do get over on the daily into that upper range, you're still going to have huge resistance up in this area on any sort of push back to that top side. Now the one thing we shouldn't rule out is some sort of a break to the downside after the bounce, right? So once we get this bounce, if we get up into that top range, for example, between the lower and upper floors on the S&P 500 and fail there, then we're going to come down and test again. In the second test, third test, so forth, always you're eating up the demand that's at that lower level, and so the possibility of a break becomes greater. So we have to keep that in the back of our minds that we could have that sort of situation setting up, and that in fact we may see that if we fail to get higher and get into the upper range. I talked about the traditional head and shoulders look already. If we look at the possibilities on that breakdown, if it does happen, right, these are a repeat from last week. You can read them again. I'm not going to go over them individually again, but this is the same price points if we come down and if we break. On the sector views, right, the safety sectors no longer look safe. If we pull up the consumer durables, for example, I mean, this is your typical safety sector, right, where money rotates to when people are concerned about the market. You had an inevitable push up, right, then the first pullback. That came on higher volume. The next time up, you get the same sort of escalation down. Now, the volume wasn't as heavy this time. It does hold, and so we're trying to get another bounce. But this is just telling you that this is becoming much more choppy and much more, shall we say, two-sided than it was before. If we look at it on a weekly basis, for example, you can see the same sort of chop that's starting to take place up here at the top. So I dug around a little bit inside that sector to see what was moving, and we'd seen like a break of multiple swing points up here, break down, right, and again a break of multiple swing points on earnings on Hormel. Another stock that weighed heavily on the sector was Campbell's Soup. Runs to new highs and then just totally collapses off of earnings again. And so it started to collapse in front of them and then definitely collapsed on earnings. So you've got gains if you look at this and pull it back, look at it on a weekly, in some of these quote-unquote safety stocks where they've taken away 3-4 months of growth, right, in terms of price growth, all in a day, all in a week. And so you can see the safety just isn't there anymore in some of these plays. We can get a bounce here, but it's nothing different than last week, other than what we talked about above. I suspect we're going to have a bunch more chop take place. If we look at the ETF highlights, the Apple we talked about with the Warren Buffett, the metal and mining stocks are showing increased vulnerabilities too. Let's quickly look at those. Starting here with the gold stocks, right? So you're starting to see this consolidation, kind of a push to the downside, volume escalation on that push. And so there is right now, it's still bullish because you've had such a big move up. But when you see, just like we saw on, the safety sector, XLB, when you see these big volume pushes to the downside, they're telling you that it's getting much more two-sided than it has been because you've had a heck of a run in these already. And so, no, it doesn't stop the bullishness on a longer-term view, but on a short-term view, you can't expect these to keep pushing and pushing to the top side. As a matter of fact, if you draw in the little ranges that are here, right, that new range, there's two ranges inside this large consolidation that has created itself here, and it's not that far up, so you can expect maybe a push up towards 25 on GDX, and then it's probably going to come down and test again. And so GDX, one example of what's starting to happen in the metals and minings. If you look at just the industrial metals, you have the same issues, and so it's becoming a much more two-sided trade. That simple, easy trade to the north on these indexes is not there, and a big part of that, or these ETFs I should say, and as part of that, a big part of it is the dollar, right? We talked about the dollar, we continue to watch the dollar. The dollar has had a good lift now off the bottom. You had an ABCD structure, right, that goes from here up. It's just about completed. It's going to complete into these bars here. That's going to be where the resistance is. I suspect it will pull back off of that. It did get over the swing point high. This high changed the trend. Expect some sort of a retrace maybe down into this area, and then another ABCD structure to try to take it higher into Brexit, into the Fed meetings, into all that news that comes up third week of June. And so dollar pushing higher is going to put pressure on all commodities to go lower, and so you have to expect that sort of situation to play out over the next 2 to 3 weeks. Initially some sort of a pullback and then a farther push, and then that's when you're going to see pressure on those commodity stocks. So on the bottom line here, the earnings are done until the middle of July, so that's kind of out of the way. If you look at the potential scenarios for the coming week, last week we talked about those two swing point lows being tested but not breaking. That's exactly what took place. We went down, tested them, but we couldn't break them. What's the best case this week? Just push back to the highs. As you blow away that second range here on the S&P 500. So if I take and draw in those two ranges again, you kind of have this area here and then the area below it. And so, the best case scenario is you just come right up to this area and you don't even think about it, just go all the way to the top. That's unlikely, but that's the best case probably that I could see at this point. Worst case, you just turn around, go down, and you break those ranges. And so if we're looking at that, right, those two swing point lows that are down here, you come back, you simply break those out, and you get an escalation to the downside. Again, given the way we're set up to come into the week, if we do it, it's going to be towards the end of the week, not at the beginning. So some sort of a push up and then a complete collapse. Don't expect that as the most likely scenario, but that's probably the worst case. If we think about the best, not the best, but the likely case, it's going to be more thrashing. In other words, if we come back, look at the chart one more time, what we're probably going to see is we're going to see the move up, and we're going to see some sort of a containment in this area, right, and then thrash back down, and potentially by the end of the week be setting up down here towards these swing point lows again to try and break on the following week. So that's kind of where we stand, where things look like. Fundamentally, you got a lot of economic data that can move things this week. You got Yellen, she's going to speak on Friday. That certainly can be a catalyst depending on what she said. So far, she has been the most dovish of the group. You keep hearing more and more from the various other Fed members, voting members, that we should raise rates. She keeps squashing that, pouring cold water on it. It will be key for her to do the same thing Friday if these bulls want to get a further push. Central bankers are definitely back on the front burner with the release of the Fed minutes, because they certainly put the potential for a Fed rate hike on the table again for the next meeting in June. But then you've got the Brexit vote and the central banks gathering in about 4 weeks. It's hard to believe that Brexit, is actually going to happen. England pulling out of the EU. If that doesn't happen, that's probably going to put strength back into the pound against both the euro and against the dollar. And if that's true, right, that will put some pressure on the dollar. But remember, the dollar index The British pound is only a third of the weighting in the dollar index. The biggest weightings are the Japanese yen and the euro. So even will have a minor effect on the U.S. currency in terms of putting pressure to the downside. It's not going to have the huge effect, but it will probably be an outsized move when it takes place, and it could be a catalyst for the various markets. Once we get there and once we see how they set up, we'll have a better idea of how that's going to play out. So that's going to be a big thing, and it also may affect the central bankers, just as we saw back last fall, if you remember, when China was rumbling and people were worried about it. The central bankers, in particular the Fed, said, oh, we can't raise rates because of China. Well, we may get to June and we may hear exactly the same theme again, this time because of the Brexit vote. That's it for this week. Thanks for joining me, and hopefully that will help. I think we're going to see some more chop for the coming week.